Welcome to day 2 of Mastering QuickBooks desktop version. We're so glad you're back. And just a reminder that after today's session, there will be an evaluation, including a chance to sign up for Greg's newsletter. So please just stay on as the session closes. It's just literally a 4-question evaluation, but that way you can also hook into his content as well and get that newsletter monthly. That's it, Greg. I'm going to turn it over to you. And
Sure.
Let's get going.
Well, it's all the same people as yesterday, unless somebody missed yesterday. Put in the chat if you were not here yesterday. The chat is the way that I talk to you and the way that you talk to me. So Victoria was not here yesterday. Sheena was not here yesterday. Rachel was not here yesterday. You can get the recording. Wendy, Jane. So that's 5 people, which isn't bad out of 140. So that's pretty good. All right.
So we should reiterate then that you will get the full slide deck for both days and the recording of both days, probably Friday or Monday at the latest. So not to worry if you missed yesterday.
All right. So it looks like it's more like 10 or 11 people that weren't here yesterday. So yesterday we covered different topics than we will today, but you will get the recording. And for those of you that were not here yesterday, I'm going to make this really quick. My name is Greg. I'm a CPA. I do 990s. I do audits. I do bookkeeping for nonprofits. Actually, my firm does. I have a firm here in Atlanta, Georgia. We do audits, 990s. All we do is service nonprofits. That's our specialty. We do it all across the country. I also own a company called QuickBooks Made Easy. And what QuickBooks Made Easy does, let me just get back over here, is it teaches nonprofits how to use QuickBooks. So I would suggest that if you haven't already done so, check out our website. It's QuickBooksMadeEasy.com. And the reason why is because, as I mentioned yesterday, we'll give you the coupons again today to sign up for our 3-day course that's coming up at the end of the month. It's under webinars. Also, if you go under tech support, you can get a year of tech support for $200 off. It's only going to be $300. You can ask us any questions that you want. We can even dial into the software. I just got off an appointment with somebody right before I got on this call. And it's a whole year's worth of tech support in QuickBooks Desktop, just for those of you that are nonprofits. Now, to ask questions, put it in the chat, just like yesterday, unless it's really long, okay? If it's a long, involved question, put it in the Q&A, and Paige Hudson Garcia, she's on the screen now, the bottom left, she will answer those questions for you that are too long for me to read during the webinar, okay? So now, as far as what we covered, let's see here. That's how to make Zoom bigger. All right. Well, this is the code, I'll tell you now, for those of you that missed it. For our 3-day, it's 2 hours a day for 3 days. For desktop users, it's coming the 24th, 25th, and 26th from 2 to 4:30. It's 2.5 hours a day. We'll take a couple of breaks. For those of you that weren't here yesterday, we'll take a break today in about 40 minutes. So don't worry. You'll have time to chill. Anyway, so the code for $40 off our 3-day webinar goes from $299 to $259. It's called MPQ 40 off. All right. All right. And let's just get into what we covered yesterday. Yesterday, we covered how to do in-kind contributions, how to track volunteers. How is that different from the current webinar? Cynthia, this webinar is specific topics, whereas the 3-day webinar series goes over everything. It's more like, I need to know how to use QuickBooks for my nonprofit. I need to set it up. I need to understand that enter transactions. I need to do reports. It's much wider than this net, okay? Auto allocating expenses, board reporting. That was day 1. The only thing we did not do yesterday was how to auto allocate expenses. I will do that at the end of the day today. What we're going to cover today is we're going to spend the vast majority of the day on restricted grants, okay? And then we're going to look at some other board reports as well, okay? So what we're going to do today is we're going to do some of restricted grants, then we'll take a break, then we'll finish up restricted grants, we'll do some more board reporting, we'll do the auto allocating of expenses, and we will finish up, okay? So that's how we're going to run. And let's see. So restricted grants, this is what the topics are going to be. This is specifically what we're going to talk about. How to define a restricted grant, so you know what it is. How to enter it in QuickBooks. How to tag non-payroll expenses to it. How to tag payroll expenses to it. How to enter a budget, and how to report on that budget. And then there's one more thing that I want to talk about. Let me tell you what it is, and then you tell me if you know what I'm talking about. So just look at me for a second. So say your fiscal year ends June 30, okay? Say you get a grant the day before the fiscal year ends, but it's for next year. Well, you got the grant, so typically people put it into the income. It shows on the profit and loss, and it makes it look like you made a lot of money for the year ended June 30, 2022, when in reality, a lot of this money is restricted for next year, okay? But yet it makes it look like your P&L, like you made a lot of money, and then the board gets confused because they're like, well, we have a lot of money. Can't we spend it? No, that's restricted for next year. So it confuses people, all right? And it messes up your budget to actual reports. Does anybody know what I'm talking about? Put it in the chat if you know what I'm talking about, because I want to make sure. Okay, cool. So when I'm at the end of restricted grants, I'm going to talk about how to address that issue. All right. So that's what we're going to do. All right, cool. So unless there is any burning question or desire or comment, I think I'm going to start. I do have one poll. I think this is an interesting question to ask. So I'm going to go ahead and click this. I want you to answer this question, and then I'll share the results with everybody. We've got about 150 people on the call. So what are you? Are you a traditional 501c3 charity? Are you a membership association? Are you a school? Are you a house of worship with or without a school? Are you a performing arts organizations? Are you some other type of nonprofit? Are you a quasi-governmental agency? And I didn't even put this on here, but are you a bookkeeper? Sometimes we'll get bookkeepers in here. And if you're a bookkeeper, just go ahead and put it in the chat, type bookkeeper or accountant. So we can see.
There, Greg.
Oh, it is? Oh, I didn't go down. That's right. Accounting bookkeeping service. Okay, I did. Okay, thank you. JT says he's a senior accountant. Does that mean you're a really important accountant? Or does that mean you're an old accountant? Or does that mean both? Boys and Girls Club is probably a 501c3. All right. I see some people putting it in the chat. I realize you didn't need to do that. You can just put it in the questions and answers. So I'm going to go ahead and click End Poll. Oh, a CASA. That's cool, Sarah. I have a client that I do the audit for that's a CASA. Anyway, I'm going to go ahead and click End Poll. By the way, remember we talked about in-kind contributions yesterday. We book in-kind services for all of those CASA volunteers. All right, so 70 of you, so over half of you, 56% are traditional charities. We have 10 schools, 3 membership associations. We have 4 houses of worship, 2 performing arts. We have 5 bookkeepers and 31 other types of nonprofits. That's interesting. I wonder what those are. Obviously, we're missing, because I figured that covered the gamut, but maybe not. All right, so I'm going to go ahead and stop sharing. Okay, cool. All right, so I am ready to roll. Defining I don't know what a C19 is, Marilyn. That's interesting. Tell me what that is. Okay, defining restricted grants. So the first thing I need you to understand, and this is important, so listen carefully because people get confused right away, so I want to fix something here, okay? A restricted grant is a grant. Now, the grant can come from an individual. The grant can come from a corporation. The grant can come from a foundation. The grant can come from a governmental agency. Now, when it's a grant from a governmental agency, the document that you says a lot of times will say contract it's still a grant. Okay. All right. All right. Veteran organizations. Yeah, maybe so. All right. So there are two reasons why a grant, which again could come from individual, corporation, foundation, government, there's two reasons why it might be considered restricted. One is that it has some sort of use restriction. It has strings attached, and the strings have to do with what it can be spent on. All right. Now, the use restriction means it's restricted in terms of how it can be spent, meaning it has to be, it's not just money given to your organization. It needs to be restricted in some way. Now, that restriction may be really minor, like just use it for your education program, or it may be real anal, like government grants are. You have to use it to do these things for your education program. We'll only spend it on salaries and travel, maybe real restricted. But in either case, it's restricted. The only time it's not restricted, if you get a donor or a funder who gives you money and says, we'll use it to help the children. Well, that's the mission of your organization. That's not a restricted grant. It has to be more restricted than that. Okay. So, all right. Or it could be time restricted. These are grants, they don't have use restrictions, but they're restricted in terms of time. Can't spend it till next year. All right. Many grants have both a use and a time restricted. If one or the other is the case, it's a restricted grant. Now, the big thing that people get confused about, okay, I'm going to come up to the screen here. Does anybody have funds where, I don't know, I had a client that was a neighborhood association, and this was a few years ago, and they had a big tornado come through the neighborhood, and they created this project, and it was like Tornado Assistance Fund, and people could donate to the fund, and all the money donated to the fund was earmarked for helping people get their houses fixed, basically paying the deductible. It was like a project or a fund. Does anybody have those where you get donations from multiple locations, multiple people, but it's earmarked? People call it a restricted fund. I want to know who has that. Kathleen, Jamie, Lori. Okay. Now I'm going to tell you right now, that is called a restricted fund. It is not a restricted grant. It is a restricted fund. And I'm going to suggest that you use classes or subclasses to track that. That is not what this topic is about, okay? Restricted funds are not the same as restricted grants. A restricted grant, which again could come from one person, one donor, one corporation, one foundation, one governmental agency, has something you write out, you sign it or whatever. Maybe it's just a letter given to you. But the point is it came from one person, one entity. If it's coming from a bunch, that's a restricted fund. That is not the same as a restricted grant. All right. So if you want to talk about how to track restricted funds, I like to use classes, but that's not what this is about. We can talk about it at the end if we have time. Is everyone cool with that? Okay. Anybody have a question? No? Yes? All right. So somebody tell me to move on and I'll move on. I want to make sure y'all are listening to me because that confuses people. All right. Okay, Lee, I will. All right. Now, the goal of getting QuickBooks to track this is because you want to be able to tell the funder how you spent the money. And so ultimately what we're going to be working towards is a report that will show you how the dollars from this particular grant were spent by line item, okay? If it is a reimbursement grant, how many of you have reimbursement grants? Put it in there if you have a reimbursement grant. Okay. The method I'm going to teach you works the same if it's a reimbursement grant, okay? So if the grant is something where you get the money in advance and then maybe you get money as you go through giving them reports, the method I'm going to teach works. If the grant is a reimbursement based grant where you enter your expenses first and then you request reimbursement, this is going to work also. Okay. All right. So that takes care of that. Okay. Now, if you have a budget for your grants, some grants have budgets by line item. You can see how much is left to spend by line item because we're going to enter a budget for it. Okay. Not all of you will need to use the budget portion, but we're going to teach it anyway. And this report will also ensure that you're not counting a single expense on 2 grant reports. Okay. So if you're not tracking your grant expenditures in QuickBooks, if you're waiting to the end of the grant cycle and then trying to figure out how you spent the money, then you run the risk of reporting the same expense on 2 different grant reports. If you track it in QuickBooks, you remove that, okay? How would this be how you record PPP monies as a grant? Yes, Jamie. Once the PPP money is forgiven, it is a federal grant. And yes, as you pay payroll and other expenses, you point them to that grant. That's right, Jamie. It is a grant. All right. You are welcome. All right. So, and it also, the report that I'm giving you, so I guess my whole point is the goal is to create this one report, and this one report is going to do all these things for you. And it's finally going to help you determine if you've used restricted grants inappropriately. All right. All right. Now I'm going to repeat something I talked about yesterday. 1, there are 3 things that need to be tracked when entering an expense. 1 is the natural category. I'm going to go back into QuickBooks Desktop, just kind of pick up where I left off yesterday. Now, where would we put the natural category when we're entering an expense? Where would we put, which of these columns would we use to put the natural category? By natural category, I mean, is it travel? Is it supplies? Is it salaries? Is it equipment rental? That's right. These are going to be your natural categories, okay? Now, what did I say we used classes for? I mentioned it yesterday. What do we use classes for? If we're doing this stuff right, what do we use classes for? Put it in the chat. The 990 tells us that we have to break it out by program, admin, and fundraising. For those of you that weren't here yesterday, unless you are a house of worship, which I think we only had a couple of those, unless you are a house of worship, you're probably having to file a 990. And the expenses in a 990 have to be put in this flow chart. Let me zoom in on this. And you can see there's a column for program, a column for management in general, and a column for fundraising. I must be able to have my expenses not only by the natural category, which are the rows here, but also program, admin, and fundraising, which are the columns. You want to use class for that, all right? So I know some of you are using classes right now to track your grants. I don't want you to do that. I want you to use the customer job. That's what we're going to teach. There's lots of advantages to doing it. So just start doing it for your next grant, okay? But before I do that, I'm going to ask another poll question. This is very important. Answer the poll. I want to know how you are tracking your grants at this point. And let me, hold on, let me get out of here and do another poll here. There it is. Nope. Sorry. Where's the question? Okay, I don't have the question. Okay, so in that case, I can't do it as a poll. I really thought that I could, but apparently I can't. All right, so everybody in the chat, put how you're tracking it. Class, Excel, a lot of people saying classes. Customer job, that's good. Some people are using sub accounts. Some people are using, so it looks like either classes, accounts, or Excel. All right, it looks like, or customer job. So I really want you to use, now somebody said funding source. That doesn't really make any sense, Christine. What I'm suggesting is, how do you point an expense to a grant? You got to either use the account, class, customer, or not doing it at all, doing it in Excel. Okay. So yes, good. So if you're using customer job, that's what I'm going to teach. All right. So let's go through this and I'll explain to you. Oh, you don't have QuickBooks yet. Okay, that's fine. Well, now you know that this is where you put the natural category. This is where you put program admin and fundraising. This is where you're going to put the grant. Okay. So this is a list. This drop down corresponds to where to a list in QuickBooks called the customer list, and that's where you typically put people that give you money. If you were a for-profit business, that's where you would put your customers in the customer list if you were tracking them in QuickBooks. I realize many non-profit or many for-profit entities don't, but anyway, you would also put your donors in here. There's schools. You would put the parents or the students in here. Okay, so your grantors give you money also, so you would put them in here as well. Okay, so I'm going to go to where it says customers. If you have the nonprofit edition, you'll have a /donors. If you don't have the nonprofit edition, it's just going to say customers. Either one is fine. So Allison, put it in the Q&A, and then Paige will answer that. All right, so I'm going to click on this, new customer and job, click and click new customer. Now, one thing I want to say right away, I want you to see something. When you enter a grant, listen carefully, each grant is its own name in the customer list. So if you have a funder, like here we have a funder called Help for You Grants Foundation, we get a grant from them every year. Here's the 2019 grant, here's the 2020 grant. Separate names. So what that means is when you get a new funder, you are actually going to immediately set up two names in this list. I'm going to go to the top left. I'm going to click new customer, and I'm going to create a funder called Rack Foundation. Okay. I'm never going to point expenses to that. That's just kind of like a header. Okay. Then while my mouse is clicked on this name, I'm going to click here and click add. Now, what it really is a sub customer. QuickBooks calls it a job, but you can think of it as a sub customer. I'm going to go ahead and click it. And then I'm going to put rack grants. Now, this is personal preference. I like to put the dollar amount of the grant and the year that it applies for, 2024-25. And then in the company name field, I like to put the grant or contract number, okay? 4-AC8, you know, whatever. Okay. Is today going to be more towards those nonprofits who do grants? I work for a church. We do not do grants. Sorry to bother you while you're teaching. I lost connection and did not see the, okay, Dana. Yeah, we're going to spend a chunk of time doing grants, okay, on this day. All right. So I'm going to click that. All right. So here is the grant. And the reason why we're going to put a separate grant in is because for each grant year here, if it's a separate, because it's a separate grant each year. And we need to report on each grant separately. And the reports, we can't just rely on date range, okay? Because sometimes when we are entering the very last expense for the 2019 grant, the check was actually written in January of 2020. And so sometimes grants they bleed between years. So rather than worrying about when you're looking at a report doing a date range, just have a separate one for each grant, okay? Now this makes more sense. My supervisor does this and I didn't understand it first. Yeah, see, because now when you're entering a transaction, I can pick, see, here's Help for You Grant Foundations, and I can pick which year it applies for, all right? So now that's the first thing. Now, I want you to do this the day you find out that you got the grant. Don't wait until you get any money in, because oftentimes you'll be wanting to point expenses to the grant before you ever get any money. If it's an advance that you're waiting for, no sense waiting, start pointing expenses to it now. If it's a reimbursement-based grant, then you have to start pointing expenses to it now. All right, does that make sense to you guys? Now, another thing I'm going to tell you that it really bothers me. By the way, we're 25 minutes away from a break, okay? Isn't that kind of exciting? In fact, I think I'm going to stop and take a sip of water, all right? I don't need to do that. I just poured water on myself. All right. A thing that bothers me when I go out to do audits, I do about 35 audits a year of nonprofit organizations. Of course, I don't go out there anymore because of COVID. Everything is like emailed to me. But the point is that I need copies of these signed grant agreements. And even if it's just a letter from the grantor, I need a copy of that too. Even if it's unrestricted, but particularly if it's restricted. So I can see what the restrictions are in order for me to complete my audit. Wouldn't it be smart if you had an electronic copy of the signed grant agreement or letter? It would be. And it would even be smarter if you attached it to your QuickBooks file. So this is something that you can do. When I open up my customer center, I'm going to go ahead and click on customers and donors. And you will see there are 3 columns that appear here. One of them is name, one of them is balance, one of them says attach. This is something that you've been able to do for years, okay? What I'm going to do is I'm going to double click. It looks like a little, well, let me zoom in a little bit so you can see. It looks like a paper clip, okay? So what I'm going to do is I'm going to double click next to this new grant. And I am going to click on computer, and you all can do this. You've been able to do this. Oh, it's Mr. Clippy. Yes, Pam, it's Mr. Clippy. All right. I click computer, and then I'll go to my folder called scanned grants. And this is where all the grants are, or the thank you letters, or whatever they are. I pick the grant. I click open. It's attached. I click done. I'm good to go. Okay, so now whenever I want to see it, if I'm your auditor, I double click, I click open, and there it is. Isn't that kind of cool? So I think that's really a wonderful thing. All right, so that's something that you do not get if you're using classes. All right, that's what I like. Now, Kathy attaches it at the transaction level rather than the name of the person level. But since there's multiple transactions for one grant, I prefer to attach it where the name is. But anyway, all right. So let me see. It only attaches as a hyperlink though, right? If you move the file from the folder, it doesn't open anymore. Yes, so those attachments are in a folder. Let me show you where they are. I'm gonna go to my desktop. Where's my desktop? All right, so when you go to the folder where your data file is, okay, my data file is down here, you are going to see a folder called attach, and this is where all of the actual documents are, okay? They're in these folders here. So anyway, and if you move the folder, then yes, it's no longer attached, okay? So that's important. When you go to back up your data file, you need to make sure you back up the folder as well, okay? Tip ring, Henderson. So would you suggest making these accounts and sub-accounts going forward? I don't have specific grants, but rather large donations, and I can't really go back to add the classes, sub-accounts, etc. Yeah, do this going forward. I wouldn't worry about redoing all the stuff that's already, particularly if a grant is already closed and been reported on, or a large donation is already done. I wouldn't worry about it. So I would do it going forward. All right. All right. So have you found any drag time depending upon how many documents there are attached in QuickBooks? Kathleen, Not so much. No, I haven't, because they're in a different location. So I haven't really found that as a problem. All right. So what I'm going to do now is I want to skip to the end. I'm going to build a report, all right, that is going to give you a P&L for that grant. And then I'm going to memorize that report. Then we'll start entering transactions to it, okay? And you'll see how the report will change. So what I'm going to do is I'm going to go to reports. I'm going to go to company and financial. I'm going to go to a profit and loss standard. I'm going to click all dates, but I want to get a report that just gives me transactions pointed to this RAT grant. And the RAT grant is a 24-25 year, but since it's its own name, I don't have to worry about filtering it that way. Instead, right now, this is a P&L with all transactions. So what I'm going to do, make this all, I'm going to go to customize. I'm going to go to filters. Now, filters works the opposite from the way that you would think it would work, okay? You would think you'd put in what you want filtered out, but instead you put in what you want filtered in. So you look for the field to filter that's called name, and you put the name of your grant right there. And you click OK, and now you get a P&L with all transactions pointed to that grant. Now, there's nothing on here. Why is there nothing on there? Put it in the chat. I created it. Why is there nothing on here? I put the name of the customer in there. Why is there nothing listed on the P&L? There's no data, no record, no inputs. That's right. Okay. I'm going to go ahead and customize this report, by the way, and I'm going to put the name on it. I'm going to call it RAC 24-25 grant. I'm going to click OK, and then I'm going to memorize this report. When you memorize a report, you push this memorize button right here, click OK, and now reports, memorized reports, there it is right there. You can pop it up whenever you want it. So, all right. Now, if this was a reimbursement-based grant, you could start pointing expenses to it immediately. Okay, so let's go ahead. Oh, somebody wants to make the QuickBooks screen larger. So, Carol, if you can't see it larger, then there's a number of ways to do it. No, that Control T will not work. But what you can do is you can make it larger on Zoom. So let me go back to where that slide is, because I have a slide on it. There it is. Okay, so if you move your mouse around, Carol, you'll see this button that says View right there. If you click it, click Full Screen, and it'll make it full screen. Okay, Carol? She is in full screen. Is your computer really small? But I can do this from time to time. How about I do this for you, Carol? Maybe I'll do that. All right. Okay, well, I'll do that from time to time for you, Carol. But we got 155 people here, and I can't do it like for each screen, but I'll try and group some. All right, so I'm going to enter some expenses, okay? Now, there are multiple ways to enter expenses. The point I'm going to make is that it doesn't matter whether you do a check or a bill or a credit card charge or a journal entry, okay? Doesn't matter. You can point transactions to the grant, okay? So first thing I'm going to do is I'm going to do non-payroll transactions. So we're going to write a check here, and I'm going to write a check. Oh, hold on one second. Little document that I have to get out. There it is right there. Okay. Okay. First thing I'm going to do is a printing bill. Let's see, is Kinko's in here? Yeah, here's Kinko's. So I'm going to pay them $1,250. And this goes for printing, okay? Printing. See, if you had used accounts and you have an expense account for grant expenses, then I don't know what the total printing cost of my organization is, and I can't do the tax return. So that's not a good idea. So you put the natural category there. We'll say this is for the guidance center. And then this is where we point it to the grant. Okay. So that's a check. I'm going to go ahead and click save and close. I'm going to open up that window again. And now you'll see that it has updated with this one transaction. All right. I can also, if you, and you may not do this, but some people like to keep accrual-based accounting. They like to enter their bills ahead of time. And if that's you, I can enter it on a bill as well. We'll do this for consulting. We'll say that we hired Scott Wells, it's an old high school friend of mine, to do some, or college. He was such a cool guy. He really was. Anyway, we did some consulting for him. We charged him, he charged us $3,000. So this was consulting. And we'll say that actually the grant only paid for half of it. So half of it will be paid for out of the RAC Foundation. And the other half of it was not paid for out of that RAC grant. Let me make this a little bit easier to see. Just showing you that you can split transactions. Consulting, the other $1,500, we'll say that it was paid out of a different grant, okay? Still went for the guidance center. So the point here is that you can split. No, I didn't mark it billable. I didn't mark it billable. I'm going to go ahead and click save and close. And then I'm going to go to report or go to my window and I'll open up. And now you'll see that the consulting is there as well. All right. Now, let's see, let's do credit cards. If you have credit cards that you use to buy stuff with, I'm going to go to enter credit card charge, which is right there. If you've never used this screen before, that means either you don't buy things with a credit card or you're not using the credit card entry feature, which I think you should, but that's part of our big training, our big webinar series, so we won't worry about that. And let's say, I don't know, what else do we have here? Let's say we're paying the health insurance with a credit card. So we'll point this to, let's see, do I have Blue Cross Blue Shield here? No, I don't. Okay. Well, we'll just make up something. I'm trying to think of who that health insurance company is that I have here. I wonder if I have Kaiser in here. No, I don't. Okay, whatever. I'll just name something that really matter. All right. So this will be health insurance. And we'll say the health insurance bill is $1,250. So we'll point this to health insurance. But this time we'll say, maybe 700 of it is paid for out of the RAC grant. And this goes for the guidance center. The other half of it, or the rest of it, the other 550, isn't paid for out of a grant at all. Okay, so you've got two choices. One thing you can do is just leave the customer job field blank and then just put in the class. Let me tell you something. Whenever you are entering a transaction, you always have to point it to an account and you always should point it to a class. The only time you really have to point it to a customer job is if it's paid for out of a grant. But let me ask you a question. Be honest. If you're not the one doing the data entry, you give it to somebody else sometimes and you tell them, always put something here and always put something here, but only put something in customer job if it's paid for out of a grant. What is human nature going to tell the person to do? If you say you don't necessarily have to put something in customer job unless it's pointed to a grant, what are people going to do when they get to this field here? Never. Basically, they're going to skip it. They're going to leave it blank. That's right. So what you can do, because see, we want people, this is interesting. The person doing the data entry needs to be making these decisions as they're entering the transactions, okay? So I created a fake customer called unfunded. That's where you need to point things that don't go to a grant at all. What's neat about this is, first of all, now you'll tell them always put something here, always put something here, and also always put something here, okay? That'll force them to think about this stuff. The other thing that's cool is I can do a P&L for the guidance center, have columns for customer job, and then I can see how much of the guidance center is funded by grants, which grants they are, and then how much are unfunded. So I think that's awesome. I'm going to go ahead and save and close that. Before I do that, let me bring up that other window again. So I like to see things change immediately. So here we go. Make this a little bit easier to see. Shoop. Okay, cool. So what do we got here? Let me move in close for her. So we got a minus 2750 so far. Gonna save and close. Now the 700 has been added. So if this was a reimbursement-based grant, then you would say, okay, this is what I need to request reimbursement for, minus $3,450, okay? Now let's say that are we creating an unfunded customer job? That's right, Vita. It's a customer job called unfunded. That's right, okay? Now let's report the income. Now, let me just say something here, okay? This is really, really important. Again, why is billable checked off? All right, Sarah. Sarah's not letting this go. All right, so what I'm gonna do, let me just teach you. So this little billable column, it's used by construction contractors. It's irrelevant for you. It doesn't matter whether it's checked off or not. The reason why the default, if you notice, the default is that it's billable. When I put a name in here, we'll put an account in here. The default is that it's billable and I sit and have to uncheck it. You could leave it checked, it doesn't matter, okay? If it bothers you and you wanna have it always unchecked, go into edit, go into preferences. And if you go to, I think it's, let me see, is it sales and customers? Is it jobs and estimates? Where is it? Oh, it's time and expenses. If you go down to time and expenses, you see this thing here that says mark all expenses as billable. If you uncheck that, then that'll no longer happen. Okay, so Sarah, this might make you happy. Okay, so now it won't ever happen again. Okay, so let me go back to my memorized report. There it is. All right, you're welcome. All right, so I'm going to talk about recording the revenue. We're about 10, 15 minutes away from our break. Okay, so be cool. All right, now when it comes to the revenue side, this is where people go crazy. First thing I need you to understand is that there are multiple ways of entering income into QuickBooks. And the goal of this webinar is not to teach you every one of those ways and why you would choose each way. I do that in my all-encompassing 3-day webinar series. Right now, we're just going to talk about tracking restricted grants. So here are all the different ways that you can enter income. Some people like to enter an invoice for the entirety of the grant as soon as they found out that they earned it, okay? If that's you, all you gotta do is make sure that you put the name of the grantor in the invoice, okay? Some people don't use invoices. Some people use a different form called a sales receipt form. Again, all you have to do is put the name of the grantor in the customer job field, okay? That's the second way of doing it. Some people just go to the make deposit window, and again, it's just important that you put the name of the grantor right there. And this is a foundation grant, and we'll say we finally got the advance, and it was a check, and it's the grants for the guidance center, and we'll say out of that 50,000 they sent us We'll say they sent us all 50,000. How about that? All right. So now what we very quickly have is the total, what we've spent, and what we have left to spend right there. All right. So that's how that works. What if you have a project with multiple funders? So a project, Allison, is kind of like a mini program for your organization. Like the Go Green Guidance Center is a project of ours, or maybe we have a separate mini project underneath the Guidance Center. We're going to use classes to identify each project, and we're going to use customer job for each one of the funders. Okay. I see you don't fill out the memo. Is that not necessary? Oh, absolutely fill out the memo. I'm just, a memo is the description of what you're doing, and that's not really something that I feel like we need to teach. We use classes for functional expenses. Yes, that's true, but a project is like a mini program. So you would make it a sub under the program that the project relates to. It's almost like you have a new program, okay? Allison, let me make sure that makes sense to you. Can this work for a line of credit as well? Absolutely not. No, this is just for tracking restricted grants, not for loans, Sheena, not for loans. All right. So let's see what we have here. So now we haven't covered payroll. So let's go back to entering expenses. Now, when it comes to payroll, that's probably the biggest cost of your entire organization is payroll, right? And so we want to be able to enter payroll by grant, okay, as well as by class. So how you enter payroll depends upon whether you're using QuickBooks as your payroll service. So is there anybody that uses QuickBooks as their payroll service? They go into pay employees and they use the payroll service within QuickBooks. Okay. So those of you that do, I have great news for you. Provided that you have a feature turned on, you'll be able to split your payroll by grant, just like you can split everything else by grant. Let me show you what I mean. To turn the feature on, this is only for the 8 or 9 of you that are using the QuickBooks payroll service. You go to Edit, you go to Preferences, you go to Payroll and Employees, you click over here, this thing here that says Job Costing, Class and Item Tracking for Paycheck Expenses, make sure that's checked. Also, where it says assign one class per entire paycheck or earnings item, pick earnings item. This will allow you to split a check by class, which is your program admin fundraising piece, as well as by grant. That's what this does, okay? I also like copy earnings details from previous paycheck. That way, when you split one paycheck, the next paycheck will come automatically split as well. So again, you check this one, you check this one, you check this one, the person who can't see it, you check this one, and that one, okay? So almost done. So then when you go to pay employees, you check off the employee, open the paycheck. Now, this is a salaried employee. I'm going to tell you right now, you split the pay using the hours column on this screen. Let me show you what I mean. Say you want Jenny's, you want her paycheck, part of it to be paid by the RAC Foundation, add another salary, part of it to be paid by the Bill Sims grant, another one, part of it not to be paid at all. If it, by any grant, what am I going to put here if it's not paid by any grant? What am I going to put here if it's not paid by any grant? Thank you, unfunded. All right. And then you could also split the class, but I'm just going to assume that this person is the program director for the Guidance Center. So I'm just going to put it all here. Okay. Now, notice how it splits things evenly. Obviously, that's not really the reality. And so instead, I'm going to use the hours column. Now, you express the paycheck in terms of hours in order to get it split. So let's say I want half of the time, that would be 40 hours, to be put to the RAC Foundation. We'll put 20 hours to Bill Sims, and the other 20 hours we will put to unfunded. Okay, it's going to split. It's going to split. See, 1,000 goes to the RAC Foundation. That's how that works. All right. Now I'm going to save and close. I'm going to click continue. I'm going to create the paychecks. And then the next time I go in to do a paycheck, look at that. So there's salaries and wages, $1,000. If I had payroll taxes, it would have done that as well. Okay. Now, the next time I go in to do a pay, I'll go to pay employees. We'll check this, continue, open the paycheck detail. Well, it's an older date range. But the next time you do that, it'll go in and it'll assume the same paycheck details on the next paycheck. Does the employer detail fill with employer share? If you have, Marilyn, if you have the payroll service, it does, and it splits it as well, okay, using the same ratio. Now, the vast majority of you are not with QuickBooks Payroll. That's what Marilyn just said, Zena. And yes, it splits the payroll taxes as well. Okay. Is it possible to limit access to QuickBooks Payroll to only specific employees? Absolutely. If you go into your company and you go into set up users and passwords, set up users, that's where you go do it. All right. So the vast majority of you are with another payroll company like ADP or Paychex or Corporate Pay or Gusto. Who's with another payroll company? Tell me what the other payroll company is. Okay, Paychex. There's a lot of ADT, Paylocity, Paycor, Atrix, CheckWriters, ADP. All right, so most people are either with ADP or Paychex. So with payroll, if you're with an outside payroll company, the process of entering your payroll in general, it's a topic that I cover in the training, the 3-day training, and I could spend an hour teaching it to you. Again, just like with entering income, there's multiple ways of doing it. Some people do a journal entry. Some people do a write check window. Those are usually the two that I see. Square? George, Square does payroll? That's weird. Anyway, so what I'm going to do is I am going to go to a journal entry. That's how many people do it. And most people, what they do is they memorize a journal entry for payroll, and then they go in and they simply change the information every month for the new grants and the old grants. Now, I do want to talk to you for a second. We're just about ready for a break. Oh, you enter a bill? That's fine, Tommy. I do want to talk to you about this. Splitting payroll between grants is a pain in the butt, okay? Now, I wish that you could have an outside payroll company just know how to split it. But the problem is every single month, new grants come in, old grants go out, particularly if you have a lot of grants. So you end up having to adjust your allocations every single solitary month. So if you find it painful and you have this Excel spreadsheet where you figure out how payroll gets allocated to grants by employee, and you keep having to adjust it every month, you're doing it correctly, okay? Once you've got that done, then you can make the adjustments on these journal entries. So I'll say this got paid for out of the RAC Foundation. Here's the payroll taxes that got paid for out of the RAC Foundation. You really fill in all of these, but I just want you to get the idea. This entry is the entry that includes the pay to the employees as well as the tax draft. It's kind of interesting because it usually is 2 drafts from ADP, one for the net check and one for the payroll taxes, but I just entered as one lump entry. I'm going to go ahead and click save and close. Okay, so now you'll see this has gone up. All right, so we've got $31,000 left. Okay, now it is 2:57. And I am at a point now where I want to take a break. I loved it. It was amazing. But anyway, so tip ring. Do we have trainings for worship centers? Absolutely, we do. I'm going to go ahead and go to QuickBooksMadeEasy.com. And if you go to on demand, you will find a training product just for House of Worship. Go ahead and click it. It is, I think, 8 hours, $2.99, and it goes through all of the specialized needs: vendors, donors, fund buckets, chart of accounts, entering your budget, transactions, income and expenses, payroll, year-end adjustments for funds, donor communications. And for an extra $100, you get 3 months of tech support. Okay, so anybody who is a House of Worship, go there. If you'd rather go to a live training or a live webinar, we have a faith-based 2-day webinar series happening next month that you can do as well. Okay. All right. Enough of that. All right. So I do not have a name filter in my P&L report. Everybody has a name filter in their P&L report. I find that shocking. You click customers. Now, when you go to filters, it's going to be in alphabetical order. So look for name. Look for name. It's got to be there, Terry. Everybody else in the world has it. You've got to also. Okay. So I'm going to ask another question here. And let's see. What do I want to do? Yeah, I want to know who makes the financial decisions for your organization. Who makes the financial decisions? The CEO, the board of directors or a committee, the finance person, a program person, program participants, community members, donors, the government, volunteers, or somebody else? Curious to see here. This is probably in order. Looks like so far half of y'all are CEO and the other half of the board of directors and or committees. Isn't it wonderful to have committees make decisions about spending $50? All right, cool. So there's 150 people on the call. And we've got 100 people that have answered so far. There are just a few people that haven't come back yet. I do not want anyone to miss what I'm about to teach. It's really important. So I'm going to just wait a couple more seconds here before I get going. So we've got 106. Please answer the poll. If you've not answered the poll, wake it up and answer the poll. I want to make sure. Come on, guys. Come on. You're here. All right, we got 110. Back at your seat. Stop wasting time. Come on, you paid for this. Can you tell me if we can add credit card charges? So Jessica, I'm not sure what those words mean. Did you just put your water bottle in the tree? I did. There it is. And it's back and it's gone. That's how you can tell that it's a virtual. All right, so I am going to end the poll. We've still got about 20 people that haven't answered yet. Very upsetting. So here we go. It looks like the CEO is 54%, 48%. Board of directors, it must be that you can answer more than one question. So I'm in on the home page. We do not have the icon. You don't have, when you click home page, you don't have this button that says customers? I don't believe that. That's got to be there. That's got to be there. Okay. All right. So I'm going to go ahead and stop sharing here. And I'm going to teach something that is going to kind of take this report to the next level. So this is kind of a big deal. So I need you to pay really close attention. All right. Now, if you have more than one grant, what would be cool is if this report not only gave me what's going on with this grant, but gave me all grants, okay? So what I'm going to do is I'm going to go over to customize. I'm going to go over to filters, and I'm going to go down to where it says name. And instead of just picking one grant, I'm going to go up and pick multiple names, and then I can select multiple grants. Okay. I'm going to click OK. Now I'm going to click OK. It adds all of the grants together. I'm going to go up to show columns. I'm going to click this. I'm going to click customer job. And now it's going to give me each and every grant's P&L. All right. Now I'm going to click customize, because now the name of the report isn't just the one grant. It's my grants P and L. It's all of them. All right. And then I'm going to memorize this. All right. Now, anytime I am in the middle of entering a transaction and I don't know whether I have money left over in the grant for it, I can go to my memorized report and pull it up on the screen. Wait, is that the wrong one? Hold on. Reports, memorized, grants P&L. I can go on the screen, immediately see that I have 31,000 left here. I've used all this. This has a little bit of a shortage. Okay, I've overspent here. Okay, so this is really cool. Now I've got a question. I have a question. Since this is a memorized report, it's only giving me the grants that I have filtered to include. And I only told it to include multiple names, this grant, and this grant. What happens to this memorized report when I add a new grant? What's going to happen? Is it going to appear on the memorized report automatically when I add the new grant? Yes or no? It won't change. What am I going to have to do to this report? Ruth says it. You have to go back in, you have to click the multiple names, and you have to check the new grant that appears so it'll apply. And then it'll appear, which is a pain in the butt. So I've got an extra special thing that you can do to where you no longer have to worry about that, okay? When you go to the Customer Center and you click on a grant, here's the one we created. If I go to additional info, you'll see something called customer type. Melanie's already doing it. She has a customer type called grants. I have one called restricted grants, because not all grants are restricted. Not all grants need to be on this report. I'm going to make each one of the grants that is restricted, I'm going to make them the restricted grant type. So then all I have to do, instead of the filter, I'm going to click on the name and click remove filter. And what am I going to make the filter? What should I filter by now? Oh, thank you, Melanie. What should we filter by? By not job type, customer type. That's a different field, job type. I click it. I click restricted grants. I click OK. I memorize that report. Replace. Now it'll always give me what I want. Now take a look at this grant. Grants are us from 2024. You see there's 5,000 in, 5,000 out. The grant's over. I don't need it on this list anymore. It's always going to be on this report as long as the customer type is restricted grants. Okay? Never been job type. It's customer type, Cynthia. All right. So what I'm going to do is old grants that I don't need on the report anymore. I'm going to go down to, here it is right here. Double click on it. Go to additional info. This is where you add the customer type. And I'm going to make it be closed restricted grant. That's why I created that customer type as well. So now it'll automatically disappear. And then whenever I look at the report, it's only going to give me the grants that are open. All right. So now if you notice here, this is a grant and then there's a total. This is a grant and then there's a total. This is a grant and then there's a total. The reason why is because in my customer list, I have it with subs underneath it. Okay. So in the newer versions of QuickBooks Desktop, I can actually go to this button here that says collapse columns right up top, and it'll get rid of the subclasses and just give me one parent class, which is really nice. Okay. I don't know if you make them inactive, will it appear on the report? Let's see. When I go to filters, there's no filter between active and inactive. So it would still appear on the report unless you created a filter for that. All right. Yeah, I don't think it will. I mean, I still think it'll appear if you just make the job inactive. I still think it'll appear. I know it will because there's still transactions on it, Kathleen and Melanie. All right. Under the display tab, advanced. So no, this doesn't relate to, this has to do if there's been transactions in it. It doesn't have to do with active versus inactive customer. This won't fix it either. Okay. All right. Yeah, in the customer list, you can see just actives or inactives right up here. But on reports, if there's transactions in it, it's going to show even if it's an inactive customer. But that's good. Thanks for trying. That's great. All right. So let's move on to the budgeting situation. So if you have grants that have budgets for them, you can enter that budget into QuickBooks. Now, I'm going to start by telling you that the budget has nothing to do with any other budgets that you might have already in QuickBooks. It's a separate budget. It's not like a mini budget of your overall organization's budget. It's a completely separate budget. It's simply a separate budget that you're entering for the grant so you can compare a budget to actual. All right. So what I'm going to do is I'm going to go to company. I'm going to go to planning and budgeting, and I'm going to click set up budgets. I already have a budget in here. I'm going to click create new budget right there. If you've never used the budgeting feature before, actually put it in the chat. Who has never used the budgeting feature in QuickBooks? Put it in the chat. Who's never used it? Okay, cool. So there's a bunch of, so one guy said this guy. So this is cool because now you get to learn about budgeting. Now I have a whole big chapter in it in my 3-day webinar series. But I just want you to know right now, I'm going to get out of here and go in here again. Company, planning and budgeting, set up budgets. Okay. Now, again, I'm not here to teach you everything there is to know about budgeting. I am here to teach you how to budget for a grant. So if you've never been in here before, you won't get this screen. I'm going to click create new budget. You'll get this screen. And it's like a little wizard, and it's going to ask you some questions. Now, the first question it's going to ask you is going to freak you out. So I'm about to teach something that is confusing. So stop what you're doing if you're not listening to me and listen to me, okay? When you enter a budget for a grant and it wants to know what fiscal year you want to enter the budget for, many times, most of the time, your grant year doesn't match your fiscal year. Maybe your fiscal year ends December the 31st, but your grant year goes from July to June. Or maybe the grant is actually more than a year. Maybe it's a year and a half. Maybe it's 2. Maybe it's 3 years. Maybe it's 5 years, okay? Do not worry about the fact that this fiscal year is the only way that you can put in a grant. Simply do this. And I'm going to repeat this 3 times, okay? Here comes the first time. pick the fiscal year that includes the first month of your grant year. Okay, so if my grant begins in July, well, actually, we'll say January of 2024, then I would pick whichever fiscal year. The reason why this is like this is my fiscal year ends June 30. So let's say the grant year begins in January. So I pick whichever fiscal year includes the first month of the grant year. Okay, so that would be July 23, 24. All right, and then you click next, and then you click customer job. If you just leave this at no additional criteria, this is where you enter your whole organization's budget. But when you go back in to do a grant budget, pick this one, and then that'll create a budget just for your grant. That's how that works. All right. So I'm going to go back. What if it begins in 20 and goes to 2025? Vita, you pick 2020, the first month of the first year of your grant year. Sarah, I don't have that option. So which version of QuickBooks are you using, Sarah? Because I would be shocked that you don't have that option. Everybody else does. So I'm really surprised you wouldn't have that option. So tell me, read to me what's on the top of your screen right there. Okay. Oh, it's there. I'm telling you, it is there, Sarah. It is there. I guarantee you. It's there. It is showing for only 1 year. I'm not sure. I think what that means for you is that this is just giving 1 year at a time. That's because your fiscal year ends December 31. If your fiscal year ended June 30, like this data file, then you would get 2. All right. All right. So I'm going to pick 24, 25. Oh, good. Sarah found it. I'm going to pick customer and job. Can we budget for more than 1 year, like 22 to 25? So if you want to have a separate budget for each year, Mohammed, then you would put in the first year's budget, and I'll act like this is the first year's budget. You put in your grant. You put in the first year, you save. Then you create another budget for the next fiscal year and put in that year's budget. It'll add them all together on reports. Okay, Mohammed, you're welcome. All right, so I'm going to go ahead and enter this in here. First month, $50,000. I got to put the income in as well as the expense. Salaries, $25,000. Payroll taxes, $2,500. Health insurance, $2,500. Rent, $12,000. Printing, $3,000. Consulting, $5,000. Has nothing to do with your other budget. Can I attach the grant document here in the budget window? No. You would attach the grant document in the customer list where this name is. Okay, so you got to go back to the customer list. You go to customers, customer center, and you would do it over here. Okay. All right, so I'm going to go ahead and click save and click OK. Now, let's pull up a report with the budget. I'm going to go to reports. I'm going to go to company and financial. Actually, I'm going to go down to budgets. Anytime you want to report compared to budget, start with reports, budgets and forecast, budget versus actual. Now, you'll have different budgets to choose from. You'll want to pick the one that says account and customer/job. That's the one you want to pick. Now, Mohammed, you may say, well, I've got 5 of them in here. I've got one for 24-25. I've got one for 23-24. I've got one for 22-23. Which one do you pick when you want to look at a report and see all of your grant budgets? Doesn't matter. Just pick one of them as long as you pick one that says customer and job. Click next. Now it adds all your grants budgets together and it gives you columns for each month, which is not what you want. So you got to click this and go account by customer job. Then you'll get a column for each grant compared to budget. I'm going to go ahead and click next. I'm going to go ahead and click finish. Now this report's crazy at first because yes, it gives me the actuals to the budget. Notice how there's no expenses here. Well, that's because of the time period. So you probably want to make the time period large enough to where it'll include all transactions. Now, I wish there was an all button here. When you have a budget column, you can't put all. So what I do is I just make this date range really old so that it includes all transactions. Okay, so here we go. So here's our actuals, here's our budget. But I want you to look at how long this report is. This report, even though it's from a budget, it ignores the fact that there were many incomes for which there's no budget. Look at Grayson. This is just a person that gave me $2,000. It's not supposed to be here. I only want my restricted grants to be here. I'm going to filter. I can filter this report by restricted grant as well by clicking on filters, customer type. Please just give me restricted grants. I click OK, and now it gives me every single restricted grant. Now it's giving me a dollar variance and a percent variance. Maybe I want that. I don't think I do. I'm going to go ahead and click this and get rid of the dollar and the percent, make it a little bit easier to read. So now I've got the RAC Foundation with a total, Bill Sims with a RAC Foundation with a budget and then the total. I'm going to go ahead and click collapse columns and get rid of that. Look at this. Now I've got actuals to budget for each one of my grants. Isn't that cool? I think that's really neat. So I probably want to memorize this report, customize, header, footer, and I'll call this grants. There we go. Okay. Now, I think I need to get to, now I've done the budget. So this is basically the report that you would memorize. Let me memorize this. And then it's available to you whenever you need. So when you're in the middle of entering transactions, you can look and see that we've still got 50, we've got, look, it looks like, what, about $12,000, no, about $8,000, $7,200 that we can point for salaries that the RAC Foundation can pay for, okay? Whereas look, we've overspent on the Bill Sims Foundation. And this will happen. And then you can basically reallocate, double click on transactions and reallocate, okay? So now I want to pivot and I want to talk about that problem that I have at the end of the year or during the year when we get grants that are earmarked for the future. But in order to do that, I need to change to a different data file. So does anybody have a question about this? We use two currencies. Can we change currencies for the reports? So how to deal with currency transactions? You know, in QuickBooks, there is a currency feature that you can turn on. Once you turn on, you can't turn it off. But I thought your home currency can't be changed. That's something I need to help you with on tech support. It's way beyond what we can talk here. If I want to enter a grant that was already has a balance, can I do that? Yeah, you can. This is what I would do. So say you haven't been tracking it. This is like a pro tip. Say you haven't been tracking it before and you want to track it now. Okay, like I don't know. Say this RAC Foundation. Actually, we had already gotten another 20. It just wasn't allocated yet. So what I'm going to do is I'm going to go to company. I'm going to make a journal entry. And what I'm going to do is I want to adjust the report to put in really the opening balance of the grant. So I'm going to make foundation grants go up by $20,000 for this particular grant, RAC Foundation, but I don't want to actually change the books. So I'm going to debit. See how I'm crediting and debiting the same exact account? So it doesn't change the books at all. And I'm going to put unfunded here. I'm going to go ahead and save and close. But now it appears here. You see how that works? Okay, cool. Is this how you show restricted fund balance? Now, if it's restricted funds, I use classes for that. And there is a way to put in an opening balance using a similar journal entry. But again, that's beyond the scope of this training. I got some more things I need to do. All right, so I'm going to go to a different data file now. And while I'm doing that, I'm going to pull up Paige real quick. Paige, are you still with us? And if so, how are things looking?
Hello, of course I am. The things are about to get dicey, I think. These getting some hard questions now. But other than that, looks really pretty good.
Well, should I answer those questions now or should I wait?
Well, you can hear the room holding their breath. They want you to answer them now. But mainly the restricted fund stuff at this point. Everything else needs to be going.
Oh, okay. Well, now,
yeah.
The people that are bookkeepers, I want you guys to say something in the chat. Who's a bookkeeper doing books for other people? I want to talk to you guys. Jamie is, Jessica, Pam, Nolan, Vita. Okay, cool. So I want to talk to you about something, but this is actually going to affect absolutely everyone. Okay, but I am going to say something in particular to you guys that are accountants. So pay very close attention. At the beginning of this webinar, I mentioned to you about a problem that occurs when you get grant money that's restricted for the future. And it's showing on your P&L and it makes it look like you made a lot of money. So your budget to actuals are screwed up. Okay. There's two things about this. One is that the bookkeeper is going to tell you, if they know how to keep GAAP-based books, generally accepted accounting principles, they're going to tell you that all of those restricted revenues have to be put on the P&L. Okay. The only ones that don't are reimbursement grants. If you get an advance payment on a reimbursement grant, you put that as a liability called unearned revenue. But other restricted grants, you put them on the P&L as soon as you find out about it, okay? That's GAAP. Now, I know some of you may not want to do that, but the bookkeepers might want you to do that. So let me show you what happens if you put money on a P&L for a restricted grant that hasn't been spent yet. Okay, I'm going to go to a memorized report that I have. This is a P&L for the year of 19 to 20, and it's a budget to actual. Now, when you look at the bottom, you'll see there are $17,000 we've made here. But in reality, we've not made $17,000. We've basically broken even because in this foundation, you see how foundations are $20,000 over. And you're like, I didn't make more money there. Well, it's because there was a $17,000 grant that was actually for the next fiscal year, 2021. We're looking at the 1920 books right now, 1920. We're looking at 1920. This grant was for 2021, but it's on the books in income because that's what the bookkeeper wants. Okay, that's what the auditor is going to want. So it messes things up because it makes it look like you made a lot of money when you didn't really make that much money. Okay, so this is what I'm going to suggest that you do in order to help the board not be confused, but still keep your bookkeeper or your accountant happy. It's got to be on the P&L, but it can be segregated. So what I'm going to do is I'm going to create an account in my chart of accounts. I'm going to call it Let's see where it is. I'm going to call it restricted grants for future. I'm going to make it not a regular income account. If I made it a regular income account, it would appear with the rest of income. I want to segregate it by making it an other income account. That is an account that appears all the way at the bottom of the P&L. Okay. Once I do that account, this is what I do. As grants come in, if they are restricted for a future year, not really the future month, I'm not so worried about that, but for a future year, I put the portion that's in the future year, I put it into this other income account, okay? No, bequest should not be other income. Other income would simply be for things that relate, income related to the next fiscal year, okay? So what I'm gonna do is I'm gonna do a journal entry to do this. What I'm suggesting you do is I don't want you guys to change your process for how you enter income in general. So I am okay with you initially putting all the revenue in regular income, it's all up in foundations. But on the last day of the month, look and see what's restricted for the next year and do a journal entry to move it from regular foundations, we're debiting it, to grants restricted for future, we're crediting it, okay? So, and as a matter of fact, I probably need to teach you when to debit and credit stuff. Let me see if I can get that up on the screen really quickly here. Desktop, and okay, here is pregnant Alice. All right. Now, Alice, here's Alice. She's pregnant. All right. I'm going to get to that unearned revenue woman in a second here. Whoever said that, the auditor told them. Anyway, to make the account go up, if it is an income account, you credit it. If it's an expense account, you debit it. See, so this will always tell you when to debit and credit stuff. And Bill can send you this so that you have a record of it. It'll always help you out with journal entries. Okay. So anyway.
Hey Greg.
Yeah. Yes.
They'll get it from NPQ.
Oh, they'll get it from NPQ. Okay.
Yeah, I've already sent it to them. Yep. Okay,
cool. So what I'm going to do now is I'm going to debit regular foundation grant. That's going to lower it. That's going to lower this 110 right here. And then I'm going to credit restricted grants for future, okay? Which is all the way down at the bottom. I'm going to go ahead and save and close. Although I made the date wrong for the entry. Let me pull up the entry again and change the date. Where is journal entry? And okay, this is 20. Whoops. All right. All right. So as you can see, foundation grants now went down to only the revenue that related to the current year. And at the very bottom, we have this down at the bottom. So now we've got it on the P&L, which is what the accountant or the auditor is going to tell you need to do. And in addition to that, we really see what we made, $219. Okay. Now, Melanie says our auditor to record as a liability called conditional grant advance. Now, Melanie, I'm not talking about conditional grants, but I am going to use this as an opportunity to explain something to you. And I need to have a webinar in this. But they, a year ago, they came out, the accounting gods, with this new rule that says if a grant is conditional, which means that there are barriers that you have to go through to get the money, and you may not get the money. And if you do get the money ahead of time and you don't meet the barriers, you have to send the money back. Reimbursement grants are like that, okay? But most grants aren't, okay? But if it is a conditional grant, then you're right. You can point it as a liability. I'm not really talking about those grants. Okay. All right. So, but this is telling you what the net is. The net is $219.50. That's what I really made. All right. Now, yeah, I'm sure, Melanie, yeah, that you have both. Now, the other thing, and this is for people that really understand about bookkeeping, and that may be no one here, but I am going to go ahead and teach it if there's one person here. If you understand about bookkeeping and accounting for nonprofits, then you know that we are supposed to have an unrestricted net assets and a donor restricted net assets account in your equity section. All right. And it used to be called temporarily restricted net assets. Now it's called donor restricted net assets. If you don't know about this, don't worry about it. But is there anybody that understands about this rule that the restricted stuff has to be segregated out on the balance sheet? Okay, cool. So what I am suggesting, all right, is that you make a journal entry to increase or decrease donor restricted net assets to match the number that is at the bottom of this P&L. All right. Okay. Okay. This is from Michelle. What about the asset balance? Right now, I just do transfers from general to sub-accounts of designated. No, that's what you have to do, Michelle. That's what I just taught. That's what I just taught. That's right. All right. So what if we want to prepare a budget that shows yearly budget, not monthly? Oh, Mohammed, these were yearly budgets. Okay. When you go into the budget entry screen, and this is more of a general question, this is something I cover in my 3-day. It looks like you have to enter a budget for every single month. Just put your entire budget in the first month of the year. Put your entire budget in the first month of the year. Okay. Kathy wants to see the journal entry for the balance sheet. The journal entry, let me pull up the journal entry again. This journal entry right here where I moved 17, let me see if I've got it here. Hopefully I did it as a journal entry. I may not have. Let's see. Let me edit this. This may be a part of a bigger entry. No, there we go. So what I did was I created, so your account in QuickBooks, you'll have an account called retained earnings. This is where everything closes to. And then what I do is at the beginning of the year, or at the end of each year, I zero out retained earnings and I move it to either donor restricted or unrestricted. And then throughout the year, I can do additional journal entries each month to adjust the number. I'll go and do another one for you here. Let's say that we spent, where's journal entries? Let's say we spent 1,000 of that 16. Let's do new. So then what I'm going to do is there's a couple of things that I need to do. One is I need to move the amount that's restricted from the bottom up to the top. So I'm going to go to this restricted grants for future. I'm going to lower it by 1,000 and I'm going to increase the foundation grants up top. And then the other thing I'm going to do is I'm going to go to unrestricted net assets and I'm going to increase that by 1,000 and I'm going to lower the donor restricted net assets by 1,000. Okay, now let me see if the report is still up here. Yeah, I want you to see the change that's going to be made here. And you'll have the recording. This is pretty fancy stuff. Really, the bookkeepers just care about this. But right now, we've got 17,000 here. Let's say we've spent 1,000. So we're going to move 1,000 from this. We want to lower this by 1,000. That's what this is going to do. Now, when we look at the P&L, is the P&L still here? Let me pull up the P&L. Let's see. did I go back to the, I wonder if I went back to the, oh, that's right. That's right. It was 7:30:19 to 6:30:20. All right. There we go. Okay. So now let's say the next month, 1,000 of this, we want to move up there. So I'm going to go ahead. I'm going to save this entry. So see, you could conceivably do this every single month, even during the year, and just move it rather than for a future year. This would be for a future period. Okay. When I made that entry, I didn't change the date of the entry. Let me change the date of the entry. There it is. Yeah. All right. So see, now this is 16 because now I've spent 1,000 of the money. So now what's left over is here. And if you go over to the P&L, look, or to the balance sheet, here's 16 over here. Okay. Yes, Pam, I agree. You were told never to touch retained earnings by the auditor. I get that. So if that's the case, Pam, then you just don't worry about this and the auditor will do it. All right. All right. So I've got a few more things that I want to teach. So is there anybody that has like some burning question before I move on? Because there's two things. All right. This is for future use, but at the end of the year, won't that zero out the GJ, the general journal? So I need to talk to you more about this, Ruth. It does get a little bit messy. Are you a bookkeeper, Ruth? Yeah. So why don't we talk one-on-one to go through the rest of this? Okay. We have tech support for this kind of stuff. But yeah, it's a little funky. All right. So what I'm going to do is I'm going to teach something that almost all of you are going to appreciate, but I need to remind you of something. Do you remember yesterday we were talking about how there are two types of expenses that need to be split in terms of how much goes to program, how much goes to fundraising, and how much goes to admin? They have to be, they're called indirect costs, and they have to be split, okay? One of them is payroll. And what were the other expenses that I said people usually need to split between admin, fundraising, and program? Utilities, insurance, rent, right. I called them facilities costs. That's great. So you guys are with me. So what I'm going to do now is I told you that there's a way to get QuickBooks Desktop to auto do that. Okay, so I'm going to show this to you now. This is advanced stuff. Okay, so it's going to kind of blow your mind, but you'll appreciate this. Once we do this, then we'll look at some other reports that I just want to show you. We'll answer some questions. We'll finish up. All right. So let's just use an example of the gas bill. All right. So let's say that you're a person who likes to enter bills first. This will work if you write checks also. So either way, it'll work. But I'm going to click enter bill. And let's say I enter a bill from the gas company. Okay, so AmeriGas, right? And let's say the bill is $300. And this is one of those bills. It's a facility cost. And I've decided, based on square footage, that I always want this bill to be split, okay, between program, admin, and fundraising. I'm going to say 50% of it goes to the guidance center. Yes. I'm going to say that some of it goes to admin, and I'm going to say that some of it is going to go to fundraising. And I do this based on square footage, okay? So what I'm literally doing is I look at the beginning of the year and I say, okay, this room, this whole area of the building is the guidance center. It's 85% of the building. So 85% of this is going to go to the guidance center. So I'll take 300 times 0.85 and then you push the tab button and QuickBooks turns into a calculator. How many people knew you could do that, by the way? I'm going to put the 300 again. I'm going to push the asterisk. That's for times. Isn't that kind of cool? And I'm going to push 10%, 0.10. $30 is going to go to admin. And so what did I do? 85, 95. And so this will be 5%, 300 times 0.05, $5, 300. Yep. Anytime you see a number, Stephanie, anytime you see a field where there's a number, you can use QuickBooks like a calculator. We own our building. Does this apply at all? If you own it, then you wouldn't do it for the mortgage, but you would do it for everything else. So yeah, it would apply. I guess I'm a little confused. Whatever bills that are associated with the building, you would do this for. This is not rent. This is the utility bill. All right. So now, if it just so happens that it's paid for out of a grant, you know, that maybe 85% is paid for out of a grant, you could do that too. Okay. But anyway, so this is where things are going to get weird. Because if I've decided that the percentage of this is always going to be 85%, 10%, and 5%, but I don't want to have to keep doing the calculating each time. I want QuickBooks to remember these percentages here and do the math for me. I can do that, okay? It's by using a feature you've never used before, and it's called this Items tab. Now, it is on all of the windows where you enter expenses. In the right check window, here's expense, here's items. If you use the enter credit card charge window, it's there also. It's not on the journal entry window, but isn't on all the other windows. So I could speak to you for 2 hours about what items are, okay? But I'm just going to tell you right now, items are substitutions for your chart of accounts list. So instead of pointing something to an account, you can point at something to an item that points to an account. Those of you that use sales receipts and invoices, those are the things that are on sales receipts and invoices. They're called items. But all they are is a substitute for income accounts. So basically, you can either put the expense account here, or you can put an item that points to an expense account. Okay, now I'm not going to tell you all about the things you can do with items. I just want you to follow this little thing here for me. So for AmeriGas, you do this for each vendor. I'm going to create 2 items. I'm going to go to lists. I'm going to go to item list. You may have never used items before in your life because you don't use the sales forms. You're going to now. I'm going to click item list. I'm going to go to the bottom left-hand button. I'm going to click new, and I'm going to create 2 items for AmeriGas. One is going to be a service. The type is going to be service. I'm going to call it AmeriGas. I'm going to put 1 right here, and here's where I point it to the gas expense account. So now whenever I use that on a form, I use the item called AmeriGas, it's going to point it to the gas expense account. All right. Now I'm going to put an asterisk in front of AmeriGas. And the reason why I'm putting an asterisk in front of the name is because I don't want people to use this, not directly. I want them to use it indirectly. I'll show you what I mean in a second. Okay, I know you're probably really confused right now, but rather than figuring out why, just watch me, okay? So far, I've created 1 item, pointed to gas. I called it AmeriGas. I put $1 in the rate, and I put an asterisk, and I made it a service. I'm going to click 1 more. I'm going to create another one. For each vendor, you got to create 2 items. The next item is going to be a group item. A group item is an item comprised of other items. All right. So I'm going to name this group AmeriGas. I'm not going to put an asterisk in front of this one because this is the one I want people to use on checks and bills. But I can say here that asterisk AmeriGas, and I'm going to put the item, see, it's an item comprised of other items. Asterisk AmeriGas. And then I put the quantity. Now, why do you suppose that I'm putting it in here 3 times? I could have put it in here 4 times, 8 times, 6 times. Why am I putting it in here 3 times for AmeriGas? Anybody know? You can put it in the chat. That's what the splits were. I split it 3 ways. So I'll put a 0.5, I put a 0.1. No, that wasn't 0.5. I put a 0.85, I put a 0.1, and I put a 0.05. And now the total should be 1, and it is. Okay. That was my split. Okay. So I could have split it 15 ways, and then I would have had 15 lines, but they all better equal 1. Okay. So I'm done now. Now look how beautiful this is. Instead of really dealing with the math now, I'm going to click clear splits, which is right up here. And anytime I enter a bill, actually, we'll just clear out of the whole thing. I'm going to enter a bill for AmeriGas. Could work on a check too. AmeriGas. I'm going to go over to the items, and I'm going to put not the asterisk AmeriGas, but I'm going to put AmeriGas. Now, what it's done is it's memorized the fact that it's 3 times, and I can put the grant here, and I can put this one, which was 0.85, goes to the guidance center. This one goes to admin. This one goes to fundraising. Okay. Now, this makes it a little hard to understand, but I'm going to try and talk you through this. We're fooling QuickBooks. Okay. You can, Allison, you can use items for expenses as well. Construction contractors use it all the time. Okay. All right. But anyway, I want you to think about this. Usually it's the utility bill. It's going to gas, but I want it split 3 ways. So rather than acting like it's an expense, if you use items, a lot of times items are for items of inventory. Okay. And a group item, which is what this is it's an item comprised of other items. It's a group comprised of different little pieces of inventory. An example would be if you go to a hospital gift shop and you are there and you're getting ready to go up to the room before COVID, and you'll see there is a teddy bear, there is a candy bar, and there's a flower, and you can buy those individually, but they also have these gift baskets that have 3 flowers, 2 candy bars, and a stuffed teddy bear. And so you're like, I'll just buy the gift basket. That's what the point of the group item is. It's basically the ability of, because people use this as a cash register. So you could say, okay, well, I'm buying a gift basket, and then you put the group gift basket in there, and it automatically knows what items make up the gift basket. Just like you can buy a gift basket, you can also sell a gift basket, and it has individual items. It helps people track inventory. So what I'm doing is basically they think that I am buying 1 gift basket, and the gift basket from the group is comprised of 0.85 of this item, 0.1 of this item, and 0.05 of this item. Now, 1 item costs $1, so 0.85 costs 85 cents. 0.1 of $1 is 10 cents. 0.05 of $1 is 0.05. Let me zoom in on this for the people that can't see it. It thinks I bought 1 gift basket, and it knows that a gift basket contains one item here that costs $1, but it knows that it only contains 0.5 of that item. That's what I put in my memorization. It knows that one of them costs $1, so 0.85 must cost 85 cents. So 85 cents, 10 cents, 5 cents, $1. 1 gift basket costs $1. But when you care about, it's split out. So if I go to the quantity and I say I want 2, what's going to happen to the quantities of the things that make up the gift basket? If I push 2, what's it going to do? I had 1. What's it going to do? Yeah, it's going to double it. So if I say I want 2, instead of there being 0.85 right here, it's going to double it. It's going to make it 1.7. So now I've got 2, $1.70, 20 cents, 10 cents, totals of $2. 2, 2. So then I'm going to go to 10, 10. Then I'm going to go to 100, 100. So here you would simply put the dollar amount of the bill, $350. It splits it. I'm good to go. Okay. So now the only thing is you want it to not only remember the percentages, but you want it to remember the grants and the classes. Well, there's one more feature that you got to have turned on. You probably already have it turned on, but check just in case. Go to Edit, go to Preferences. You go to where it says General, and you see where it says automatically remember account or transaction for the information. See where it says automatically recall last transaction for the name. Make sure that's checked. If that's checked, the point of it is to make your data entry more consistent. In other words, every time I enter an expense for a particular vendor, if this is checked, it's going to look at the last time I entered a bill or a check for them, and it's going to assume everything is the same on this next transaction. Let me show you. I'm going to go ahead and click Save and New. The next time I enter another bill for AmeriGas, it copies everything from the last time. All I have to do is change to the new dollar amount. It copies, it reallocates. I click Save and Close. I'm done. Okay. I do not know if it works in bill.com. Does it go to that expense account? So it goes to whatever expense account these items, this item called AmeriGas is pointed to. Let's go in to see what it's pointed to. Where is AmeriGas? There it is right here with the asterisk. I'll double click and look at that. It's pointed to gas and say, yes, that's where it's going. Okay. So that is, I think, really, really cool. All right. So if you like learning from me, I highly suggest that you look at taking this webinar that's coming up May 24th, 25th, and 26th. It's 2 hours a day, 2.5 hours a day for 3 days. Normally, it is, these are all the topics that are covered, by the way, in day 1, day 2, and day 3. And normally, it's $299 right there. However, we are giving you a discount of $40. Let me see where this discount is. There it is. The discount is, the code is NPQ40. Normally $299, $40 off, $259. If you would prefer to just get tech support or on-demand training from me, we have coupons for those as well. The big one I'll point out is for a year of tech support. It's usually $500. We're giving it away for $299. The code is NPQTS299. All right. And to get that, you go over here to tech support and punch in a year, punch in desktop, and then when you go to sign up and check out, you'll get the code right then, okay? With the 3-day webinar series, you click on webinars, and this is where you do it right there. Is the desktop 3-day, is that a desktop 3-day or just online? We do both, Marilyn. So this one is the 3-day. It's May 24th, 25th, and 26th. We do it over again for online. It's May 31, June 1st, and June 2nd. All right. All right. So I do want to give you just a couple of more things that I think are really cool because I promised them to you. And I'm an honest dude. And let me go back to my deck here. Let me go back to these other reports. There we go. Okay, so there are other reports that I wanted to show you real quick how to get. One of them is a statement of functional expenses. This is something that the bookkeepers will care about. Basically, all it is a P&L by class, but it's only the expenses. So I'm going to customize the report. I'm going to put in a filter, and I'm going to filter just to include ordinary expense accounts. I'll click OK, and I will collapse the columns and collapse the rows. And now I've got program, admin, fundraising, and this is exactly what it looks like on your 990. All right. And then the other report is a budget to actual with prior year's actuals. So yes, I have questions. I have time for questions. Let me just do this last little thing here. I'm going to do a budget to actual. This is something that a lot of you want. I'm going to do a budget versus actual for version 2000 for 2024, 2025. I'm going to make the columns total only. So now I've got the actuals for the year, the budget for the year, and the variances. Some people like to see what the actuals were for the prior year in this same screen. So what I'm going to do is I'm going to kind of put in more columns than you want and then send it over to Excel and hide the columns. So I'm going to go over here and I'm going to change the date range to go from 2023 to 2025. And so it's going to give me 2 years. I'm going to make the columns be by year. And then I'm going to send this over to Excel because we've got the actuals for the prior year and we want those. We don't want any of the other stuff for the prior years. So I'm going to send this over to Excel. Export. And it's going to open it up in Excel. And then I'm simply going to hide the columns that I don't want. So I don't need these columns. So I'm going to delete. And I don't need the total columns here. So I'm going to delete those. And then all I got to do is take this and move it perhaps to the end where I want it to be. So I have the actuals. I don't think I need this column either. I'm just going to hide this column. And then I'm going to take this column and I'm going to copy and I'm going to paste it over here. And let's do this. Let's have you, Paige, come on the line. And why don't you ask the questions so I'm not the only one babbling. And then we'll finish up that way because I'm tired of the sound of my own voice.
Okay, you got it. Okay,
all right.
So I'm going to pop the question from JT into the chat box because it's fairly quick, and I'm prepping the question from Tiffany, the more involved one, and I'm going to say it out loud.
Yeah, okay. Go ahead. What's the question?
Okay, so the one from JT is in the chat for you.
Okay. Are other donations and unrestricted grants recorded as subclasses under fundraising and not using customer jobs? So no, when I do a P&L by class, I put all unrestricted revenues in fundraising. There's no sense to have a subclass underneath it because I might as well just put the revenues from fundraising up here too. All right. What's the next question?
Okay, this one is fun. So this one is from Tiffany. All right. The question is, how would you notate or track the transaction for a grant disbursement related to a borrower? And then there are details. The question came about because of all the fields in QuickBooks you can track in. So she's hoping to capture the grant that it originally came in from. Then they disperse from the grant to a borrower that then takes that and repays the money later, and there's principal and interest allowed. You want me to post the details for you?
Is this a Habitat for Humanity, Tiffany? It's a cooperative fund. Okay. So this is too much to make everybody wait for. This is something that we're going to need to build for you. But I tell you, both Paige and I have dealt with this issue for a Habitat for Humanity, because basically you need to tie the funds coming in to the loan going out. So I need to work with you on it, Tiffany. So if you don't have a tech support with us, please sign up for tech support and we can deal with it that way. I'm sorry, I'm not going to do that in front of 130 people.
Sorry, Tiffany, I tried.
Is there an easy way to do year-end donation receipts? I have to YouTube it every year. I have in my 3-day webinar, I show you how to do the thank yous, and it involves using sales receipts. Oh, you just want a year-end donation receipt. That's in the training as well. Do you use sales receipts, Pam, to enter your donations? Okay, so then basically, and this is part of a much bigger conversation, but what I do is I do a sales by customer detail report. I change the date range to the calendar year that it involves, 01, 01, 24, 12, 31, 24. And then I filter the report so that it doesn't include, it only includes items that relate to donations. So I pick multiple items. So it would be basically individual contributions. In this case, I'm looking to see if there's anything else in here. It doesn't look like there's anything else. You may have more items. And then you basically customize this and you add it to the back of a letter. So you do a letter and then you say it's attached. And when you go to print this thing, it's important that you put page break after each major grouping. This right here. And then when you'll get a piece of paper, a separate document for each person. Okay. All right. Yes, single day tickets are already sold as well. If you go to our website, I would not do single day tickets though, because people tend to think that they know other stuff. And then they go through and they just show up at day 3 and they've missed a bunch of stuff. And it's not that much more money to go to all 3 days. So when you go to sign up for this thing, the 3-day webinar series, I would definitely not do the single tickets. They're $149 for each day. So, all right, I think that's it. We're 11 minutes over. We've got 116 people left. So we've got like 30 or 40 people that have gone, which tells me that it's time to finish up and do a song. I will leave you with the coupons, but we'll send it out too. And then I'll send it back over to you.
Thank you, Greg. And thank you for the discounts for our users.
Sure.